Have you been wanting to do a BRRRR project or like a value add project in multifamily, but not sure where you're gonna get the construction funding, right? Because, for a lot of people, they can save money for the down payment, but then when they have to think about how they're gonna finance the construction costs, like it becomes another problem. Like, I just saved money for the down payment. Now, how do I get more money for the renovation? So if you've been using residential loans in the past, that's been a problem. But enter commercial financing, right? So with commercial financing, you can actually get your construction costs financed for your project so you don't have to come out with the cash. What I thought I would do in this video is actually break down the details of how does construction loans work typically in commercial financing, right? So we'll go over the details from the draw process to the mechanics, and then I'll also talk about 3 key implications this has for you if you're an investor that wants to do a rehab deal with your construction being financed. So make sure to check out to the end of the video. We're gonna go over everything right now. What's going on, guys? My name is Lior and welcome back to my channel. Now, before I get into the meat and potatoes of the video, 2 super quick things, guys. Number 1, if this is your first time on my channel, first of all, welcome. Second of all, make sure you subscribe to my channel. I'm putting out weekly content on this channel all about multifamily investing. So I talk about everything from, operations, construction, financing, deal analysis, literally everything in between. So, if that's the kind of content you are looking for yourself, make sure you subscribe so you get notified every time I put out a new video. So let's get right into it. And as I said in the intro, right, we're gonna be talking about construction financing as it comes in regards with commercial loans, right? So, as we talked about in the intro, you cannot get your construction financed when you're taking out a residential loan, but if you're taking out a commercial loan, you typically can. And, just for context, when I say commercial loans, we're talking about commercial loans from local community banks in your areas. This could also include something like a hard money loan, right? Where they're gonna provide you a loan for the acquisition and then also a loan for the construction. Now, in terms of typical leverage that you'll see, right, typically what you'll see is, the leverage for the acquisition is going to be anywhere from 70 to maybe 80, 85% sometimes with hard money lenders. And then you'll typically get 100% of your construction proceeds financed, right? So, if you need 100 grand for the construction portion, you're going to typically get pretty close to that $100,000 for that construction. Now, how does that money actually get paid out to you, right? Because a lot of people think, oh, great, I'm going to get $100,000 at closing and I'm going to take that money and start spending it. But that's not actually how it works, right? So the way it works on the construction portion of it, right? Let's say you close on the property, the bank's going to disperse you whatever money you need to close on the property, so the acquisition side. But then those construction proceeds are going to go into an escrow account, right? And what you're going to provide to the bank or the lender is what's called an itemization of your construction budget, or sources and uses sometimes it's called, right? Depending on what lender you talk to. But basically, you're gonna break out in detail line items of the construction that you're gonna do in the property, right? So you're gonna put out a line item for things like carpentry, framing, plumbing, electrical, sheetrock, insulation, paint, finished materials, right? So you're gonna literally break this down, and for each line item, you're gonna say, I'm gonna spend $20,000 for this, $15,000 for this, $50,000 for this, right? Whatever it may be. And, in order to do that, you're gonna use either your own experience, right, from previous projects, or if it's one of your first ones, you should talk to your general contractor, your subs, right, and just kind of figure out what is each line item more or less gonna cost you. Now, once you actually get into the construction phase, you have to understand that you do not get those line items fronted to you, right? So like, if I was gonna start my project and I'm gonna start by doing some framing, I can't just go to the bank and say, hey, Mr. Bank, I need $20,000 for the framing because that's my contractor quoted me. So why don't you release me that money, right? Like that's not how it works. So the way it actually works is you actually have to perform the work first, right? And then the lender will come out, inspect the property, verify that that work has been done, and only then release the funds to you, right? So, in that example of framing, let's say I'm gonna start to do framing, then I have to get the framer out here, he has to buy the materials, he has to actually start the framing. Once he's done, then I'm gonna call for an inspection, then the bank's gonna say, okay, we verified, here you go, we're gonna release that amount of money from the framing line item. So now let's get into 3 really important points that kind of come out from the system, right? Because it's a little bit more of a complicated system than you're just paying a contractor in cash. So point number one is you need working capital to get your contractors going, right? Because as you saw in that example, the bank is not going to fund you the money until you do work. But if you've worked with contractors, they typically require deposits up front, right? Typically anywhere from 25 to 40, maybe even 50% deposits, depending on the type of contractor and your relationship with that contractor. You need that working capital and free liquidity to be like, oh, okay, well, my framer needs $5,000, $10,000 to get going. I have to write that out of my own funds, right? I can't get that from those $100,000 that were escrowed by the bank at closing. So that's really, really important. You got to make sure you have, free liquid capital ready to go. Second really important point is about payment of contractors, right? Because if you've done projects before, you typically know that contractors finish their work and then immediately they want to get paid right away, right? And when you're working with construction financing, if you kind of, as you heard me talk about the process, you'll realize that there's a delay between when the contractor finishes work and when you can actually get the funds from the bank to pay them out, right? Because, once the contractor, again, we'll go through that process, once that contractor finishes the work, remember, you have to call for an inspection and the bank will send out an inspector. This, can take anywhere from a couple of days to a week, depending how fast your lender moves. Then the lender submits the report to the bank has to review it, and only then do they release the funds. So you can see there's a fair amount of time delay between when the contractor finishes and when you get the funds from the bank. So you have to talk to your contractor and explain how this process is going to work, that you're going to need a little time after they're done and that you can't pay them right away. So make sure to be on top of that. And the third really key important point with this is similar with contractor payments, you also have to think about material orders, right? Like material orders such as tile, countertops, and even appliances, right? Because depending on how you structure things with your general contractor, your subcontractors, you may be responsible for ordering some of the materials, right? And if you've tried to order these kinds of materials in the past, you know that you have to put up a deposit. So very similar to like the labor part of a contractor, with materials, you need some working capital to put it up in order to actually put in the order for some of these materials. Now, the other thing that's really important to know is you can't get reimbursed by the bank when the materials arrive on site, right? So let's say typically I have to order my appliances quite a bit in advance, right? Especially today when there's kind of been, the supply chain's a little wonky, it can take some time for the appliances to come in. I might have to order my appliances 30, 45 days before, right? But the issue is a lot of banks won't reimburse me for those appliances even when they get delivered, because they're gonna wait until the appliances actually get installed and are working, right? And similar with something like countertops, right? Like let's say I put up a deposit for countertops, they arrive on site. That's great, but I can't get refunded yet from the bank. Typically, they'll make you wait until the countertops are actually installed and the job is all set with the countertops, right? So you have to account for that it's not only about the delivery time with materials, it's actually the time of install for a lot of these materials. So not only do you have to front, again, the material costs, but then there's also going to be typically some labor costs associated with it. So again, another thing that you really have to keep track of when you're doing these kinds of projects. So if you've listened to this and you're like, oh dang, like I really need to be on top of my cash management if I'm going to be doing a project like this, you are absolutely right. Because on one project it might not be that bad, right? And you kind of have enough working capital to kind of keep everything going. But if you think about it, if you decide to scale out and do more and more projects like this, you really got to keep a tight ship, right? You really need cash up front to make sure that you have enough cash in all your projects to pay up front for materials, pay up front for contractors, because otherwise your projects will stall, and you don't want that, because obviously then you're going to incur costs. It's going to be a lot longer to finish. So it's really, really critical to understand these nuances. I know it's not the most sexy stuff in the world, but really understanding how this, mechanism works with your banks for the construction financing is really, really important. So I know I just went through a lot of details. If you guys have any questions about any of what I just went to, make sure you put them in the comments below, and I will definitely help you out.